Foreign investors taking just 13% of yesterday's trade. Why are foreigners stepping out?
Well, I think it's a global trend. We saw stocks in Asia also fall and reduced participation by foreign investors. You also have to take into the fact that Thursday and Friday the market was closed because of Thanksgiving holidays in the States. So it's a bit of Monday blues, and also looking at the Dubai oil crisis. I think it's more of a systemic issue as people start to as risk appetite starts to fall. But we saw markets regain or rebound mostly in the US yesterday, and given the fact that most of this exposure is in the UK, I think the withdrawal is short term, but going forward we expect to see the market rebounding, and we expect to see foreign investors come in a bit more.
Talking about that, Safaricom started yesterday at that psychological 5 shilling level, but then ended slightly below at 460 shillings. Are we going to see the stock under pressure today? Because that really kind of defines foreign investor interest in the NSE.
Oh, definitely. What has been happening with Safaricom is that due to the management roadshows that have been concentrated mostly in Europe and in the States, we've seen a lot of investors come in due to their pricing and the fact that we've seen a lot of foreign investors take positions. But given the fact that, first of all, the Dubai oil crisis has given traders a new look. Nobody wants to be caught out as in the same way they were caught out when the first systemic issue came in, when credit risk fell. And I think we are seeing a more cautious approach, because people don't want to be holding emerging market stocks when emerging markets are under pressure. But a good thing for Safaricom, and we might see it go up this week, is the fact that most of this exposure is not in Asia. And when people look at emerging markets, they usually focus on Asia. And given the fact that Asia started recovering yesterday, due to the fact that most of the exposure in Dubai was not held by Asian markets or by Asian banks, and it was neither held by American banks, we expect to see investor risk appetite come up. We've seen people unwind the position that they're taken in the dollar as a safe haven currency. So we expect the investor appetite to go up, and in December we expect things, especially for Safaricom, to start picking up.
Another stock that people are expecting to pick up in December is Kenya Airways. Yesterday I spoke to Ali Khan Sachu on the show, and he was saying that as the rollout of the company's oil hedges takes place in December, that we could see the stock reaching its highs of 2005 of 147 shillings. Do you see that happening?
Not in the near term, and definitely not in December. KQ has been, we released a report, CFC Stanbic Financial Services released a report where we valued it at about 37.6 shillings. So for us, that's the intrinsic value, and we took into consideration the hedges themselves. And given the fact that some of the respite that KQ has had is because of the downturn or the reduction in fuel prices in terms of in international crude prices, given the fact that this will go until the rest of the year, we don't see that happening. Another factor that has been pushing the price of KQ up has been the rumors, or so to say, not to say the rumors, but the intimation that they may be taking up a stake in Ethiopian Airlines. We saw Ethiopian Airlines take profitability increase by about 170% last year. It's a symbol of national pride, and given the fact that KQ's cash flows have not also been as robust as they are meant to be, it becomes a huge proposition or a huge task for them to be able to acquire Ethiopian Airlines. So I think in as much as investors, as much as most people are bullish, it will be a bit tapered. And if it gets to about 37, 38 shillings, we will also see a lot of profit taking on the stock. So 147 is a huge proposition.
Okay, great. I'm glad you mentioned that Ethiopian Airlines rumor, because I think everyone was taken quite surprised last week when he mentioned that in exclusive on CNBC Africa. And just another stock that people are talking about is carb acid. Pretty much to date, over the last 6 days, it's lost 50% of its value. It's now trading at 117 shillings. It's pretty much expected to go down. I mean, what's the market pricing in here?
Oh, the problem with carb acid is that by the time it was coming to market, I don't think there's anybody who would actually carried out a valuation and got it and calculated its intrinsic value. And so at the moment, it's just expectations of risk on market and demand and supply. If you look at carb acid, they are doing a 2-for-1 share issue, meaning that the value that when it came back to the market at 160, if we do a 2 for 3, it comes to about 80 shillings because it was 2/3 of that value due to the bonus issue share. So it's still priced way above, and it still has a long way to come. It's still going to come down quite substantially. We expect it to settle at about levels of 85 to 90 shillings. That's when people will start seeing more activity or upside potential on it.
Focusing on some of the tea stocks, obviously a big story at the moment. These tea stocks not really performing in line with some of the prices that we've seen at the auctions. But we've seen Williamson Tea and Gachara saying that they're seeing a possible dip in performance in a report out today. Why haven't tea stocks performed in line with the prices, the escalating prices rather, when things have actually gone their way in the market?
Probably, if you look at the market statistics yesterday, Gachara and Williamson Tea went up, I think, by about 50% in terms of value, and that's because of the results. They released their results on Friday, and we see an increase in profitability and earnings per share. I think by about 4 times, it quadrupled. So we are seeing a lot of interest. If you look at capacity at Williamson Tea, it went up by 87 shillings yesterday. That's a whole. That's almost $1. And given our market, given the state of our market, that's substantial. And the good thing for them is that I think people are starting to see the potential. The only problem that comes in with tea stocks is that there's a lot of cyclicality in it. This year we are seeing high tea prices. Last year the tea prices were ravaged, and it was about the 150 level. If you look at $150, and at the moment it's about $200. So I think there are a lot of issues that come in that have not been priced. And given the cyclicality and the fact that most of the institutional investors want to hold a stock that they can keep for about 3 to 4, 5 years, depending on the kind of portfolio they have, it becomes a bit tepid to have them in your portfolio.
Mm-hmm. But is it a little bit too little too late? I mean, with the increase in supply of this commodity?
No, we've seen global tea demand go up by about 4%, and given the fact that the other tea producing countries, if you look at Colombia, they've also suffered a drought. So we expect to see tea prices go up even into the new year. The other fact that the other thing that has played into the hands of the tea producers is that we've seen the price of their inputs go down, and we've also seen a strengthening Kenya shilling. The same time last year, I think the shilling was trading at about 66 shillings to the dollar, and at the moment it's about 74 shillings. So we've seen this, a lot of factors go their way, and this may not hold going forward. We expect to see the shilling continue to gain against the dollar. We expect oil prices to go up, and despite the fact that global tea prices might remain high, the other factors might come in to limit the amount of profitability or to weaken growth going forward.
Power has obviously been a big problem for the operations of these tea companies. But in a story today, Kenya Power and Lighting Company is saying that government is going to increase its stake from 40.4% to 50+1%. What are investors saying about this? Because surely it doesn't make sense to increase government stake in a company like this.
Well, I think there are some pretty bright people behind the scenes at the central bank or at the economic or at the treasury. The problem with KPLC and the government was that the government holds 14 billion. About 14 to 16 billion in preference shares, but and these preference shares are meant to earn about 7.5% interest. But the problem has been that the government has not been realizing their value in these preference shares.